Did you just start a business or have been running a business and are wondering how different business entities are taxed? Hi, my name is Logan Graf and I'm a CPA that specializes in small business taxes. We're going to walk through the most common business entities and how they are taxed. Please keep in mind that we are not addressing state level taxes. We're only addressing taxes on the federal level. The most common entities are sole proprietorships, partnerships, LLCs, C corporations, and S corporations. Let's start with the simplest business entity, sole proprietorships. A sole proprietorship is when it is only you that owns the business and you have no formal legal entity with the state, such as an LLC or an incorporation. Sole proprietorships are taxed at the personal tax return level and are subject to self-employment tax and ordinary income tax. Self-employment tax comes out to 15.3%, not counting the self-employment tax deduction. No separate tax returns are filed for the sole proprietorship entity. The sole proprietorship activity will be reported on the personal tax return of the owner. Now let's discuss LLCs, which is probably the most popular type of entity out there because they are so versatile. LLC stands for Limited Liability Company and is formed by filing documents through the state and not the federal government. LLCs can have one member, also known as a single member LLC, or it can have multiple members, also known as a multi-member LLC. This is where it might get a little confusing. A single member LLC can be taxed as a disregarded entity, an S corporation, or C corporation. We'll talk about S corporations and C corporations in a moment. What's a disregarded entity? A single member LLC disregarded entity is taxed just like a sole proprietorship. A multi-member LLC by default is taxed as a partnership. A multi-member LLC can be taxed as a partnership, S corporation, or C corporation. Please bear with me here. Partnerships are pass-through entities, which means all income or losses are passed down from the business level to the owner level. In most situations, partnership income is subject to self-employment taxes, just like sole proprietorships. In some situations, partnership income may be passive income and not subject to self-employment taxes. If you have a loss on the partnership level, you may be able to deduct the loss on the personal tax return level against other taxable income if you have any. I said may because it's not guaranteed. There's lots of rules around this. Confused yet? A single member LLC and multi-member LLC can elect to be taxed as an S corporation or C corporation. S corporations are also pass-through entities, so the income is passed down from the business level to the owner level. S corporation income is not subject to self-employment tax, but it is still subject to ordinary income tax rates, and you'll need to pay yourself a salary, which is subject to payroll taxes. S corp losses may also be deducted against other taxable income on the personal level, but like I said about partnerships, it's not guaranteed. Not but not least is the C corporation. C corporations are not flow-through entities. So the income that is earned by the C corp is taxed at the business level. The current tax rate for C corporations is 21%. Any income that is left over can be paid out as dividends to shareholders, which is then either taxed at 0, 15, or 20%, depending on the overall taxable income of the taxpayer. That's why C corporation income is said to be double taxed, once at the business level and then as dividends. Hopefully your eyes aren't crossed right now and you have a good grasp on how different business entities are taxed. Thank you so much for watching.